And remember the best and worst investments in periods of high inflation. I've talked to people about this on the webinars. I've talked to people in person a lot, but we need to keep that in mind. The worst places to have money in periods of high inflation is to have it in cash, which is essentially also actual cash, but savings or checking accounts, which is just like cash because it doesn't make hardly any interest, CDs or bonds, because all three of those things, you're going to lose buying power. For instance, you have $100,000 in the bank today, you can buy $100,000 worth of stuff with it, goods and services. If we have 10% inflation, and I think it's going to be worse than that this year, you're only going to be able to buy $90,000 worth of stuff with that $100,000 a year from now, and it's just going to get worse. So don't have money in cash, CDs, or bonds. Where you should have money is in assets. Assets like companies. I think companies are the best hedge against inflation, because if you think about the definition of inflation being the rising cost of goods and services, rising prices, companies are who produce and sell the goods and services whose prices are going up, and they will go, their values will go up too. The second is real estate, particularly income producing real estate, and the third is gold. And I don't like gold as much as real estate or companies because it doesn't produce anything or rent anything out or anything like that. But that's another hedge. Ultimately, we all have a choice. The choice is either hoard cash in the bank and be fearful and lose buying power, because you are going to lose buying power if you don't have your money working for you, or deal with the volatility, tolerate the volatility of the stock market.